I believe the starting point should be to kind of really take that leap of faith that this is India's decade. That to me should be essentially the starting point.
Decade.
Which is that I clearly believe that a lot has happened in terms of technology and technology adoption. So my view is that for many years, maybe for the rest of this decade, bet on a tech-savvy, young, changing India. I think that is going to be really the theme or the most powerful theme which can play out.
Investments are supposed to be boring. The minute they turn interesting or exciting, you are not investing, you are gambling. So be careful about that. A little bit of gambling on Diwali is fine, but keep that little money on the side, but your core portfolio has to be invested for the long term.
It's the Festival of Lights, that time of the year that fills our hearts with hope and joy. Let me start by wishing all of our viewers a very happy Diwali. May the coming new Samvat fill us with health, wealth and happiness. This is the Market Cafe. I'm your host Surabhi Upadhyay, and today we're in the mood for some Indian. Today I have with me not one but two guests on the show. One of them is a very well-known stock picker and he's been doing that for over 3 decades. The other runs a very successful mutual fund house, and it's a mutual fund that's really well known for deep fundamental insights and research. So let's go. I'll introduce you to both my guests. Gentlemen, what a pleasure to have you here with me today. I really appreciate you taking out the time, and first and foremost, thank you for coming and happy Diwali to both of you.
Happy Diwali to you too, Surabhi. Thank you for having us here, and happy Diwali to all the viewers.
Nilesh, it's good to see you in this avatar. I know we keep talking on markets on a regular basis, but this is so nice and festive.
Absolutely, and thank you so much, and happy Diwali to you and all the viewers. And yes, it's wonderful times, truly festive times, and we can see the festivity all around us.
So it's not bad, right? I mean, it's been a roller coaster year for the market, but in general, how's the Josh?
I think the Josh has never been as good. It's been quite phenomenal. It's probably the best time that we have seen in a very, very long time, where the economy is firing, earnings are firing, markets are kind of reciprocating, liquidity is strong. So I think everything that you would want to from the markets or as an investor, you clearly seeing this, it's manifesting, and it's a brilliant time, and what a coincidence along with the festive period.
Yeah, absolutely. I mean, it just feels right considering the kind of money that's been made, not so much in large caps or at least mid caps. You know, investors have had a great run. Neil, what would you say? Mutual funds, the Josh has never been higher, I think. The kind of money that you guys are drawing in, right?
Yes, so Josh has been a little too high right now in the recent past. So a bit of caution also is necessary at this time, you know. So again, I think people think that markets are just going to go one way, it's just going to go up. And we need to be a little cautious about that. But on a whole, it's been a great ride. I think we are on a good wicket. Again, if you have money in the market for longer term, 5-7 years, I think it's never been better.
Thank you so much. So, you know, it's the theme is Indian today. So I've taken the liberty of ordering some nice masala chai with some knickknacks here and there. So I hope you folks will enjoy it. It's not coffee, it's chai. It's Indian is the style and the theme on the show today. Oh, thank you very much. So I have to ask you, gentlemen, about you know, very simple thing: how to get rich in the next year, in the new Samvat. That is the core theme that I have in mind. But on a serious note, you know, Nilesh, the question is, given the way markets are, and there is this whole geopolitical issue, and yes, we are talking about what central banks are going to do next with respect to interest rates. Are you, really optimistic about the new Samvat, or do you think it's more caution than optimism now?
Well, Surabhi, the way I have looked at markets over the years, there are always concerns, challenges, risks. Every year there is one single factor which plays out quite significantly, or it at least gets talked about or debated quite a lot over the years. At some point of time it's Brexit, at some point of time it's Greece, at some point of time it is some geopolitical crisis or some elections. And these are things which essentially we all have over a period of time learned to take it in our stride. Events will be there, risks will be there, volatility will be there, but I think at the end of it, you have to remain focused on the very long term. India is the country of opportunities. This is going to be India's decade. And so I think one should be more fixated on that rather than what's going to play out over the very short term, because none of us honestly have any control in terms of where any of these moving parts are finally going to come up and in which way they'll manifest themselves. So I think the best way to do is to take volatility in your stride and be focused on the long term.
Okay, fair enough. Well said. And you can never go wrong with that, right? As long as you keep that basic tenet in mind. But Neil, I heard you in the in the earlier answer, and you did have an underlying tone of caution as we get into the new year, and that's not bad, I suppose, right?
Yes, I think being a little cautious is fine. I think one thing is that the return expectations need to be calmed down. I think when I'm meeting a lot of investors, a lot of younger people, they feel like 20-25% returns is like it's a given. You'll always get that, and the recent past has shown us, right? The last 1 to 5 year returns have been around that much. But going forward, I think with interest rates also rising and at a normal level at 5-6%, I think 12-13% returns from the market should be expected. I think the secret to happiness is having low expectation. So if you have 12-13% expectation, you get 15%, you're very happy. But you have a 20% expectation, get 17%, you're still sad. So have lower expectations out of equities going forward, but I think it'll still be positive and have a long-term approach towards that.
Yeah, I hope all our viewers, especially the younger ones, are listening to you gentlemen, because the more I talk to market experts like yourselves, everybody's saying the same thing: tone down the expectations, be rooted in reality. So I'm hoping that people are listening. But since the idea is how to make money over the next 1 year or maybe several years, Nilesh, let's straight away get to it. Now, I know that you are someone who's tracked the technology space for so long, right? And we are going through a lot of disruption even as we speak. And there are so many new things on the horizon, AI, etc. and whatnot. What should an Indian investor watch out for when you're looking at technology in the new year?
Well, I believe the starting point should be to kind of really take that leap of faith that this is India's decade. That to me should be essentially the starting point.
Decade,
which is that I clearly believe that a lot has happened in terms of technology and technology adoption. But my view is that this is becoming more and more universal, more and more ubiquitous. You have different segments of the country, of the economy, of the society adopting technology. And that, I think, is doing a lot of good. It's bringing about efficiency, it's bringing about productivity. It's making India more inclusive in terms of it's bringing a lot of the other segments which were earlier not catered to, it's bringing them in the mainstream. So my view is that for many years, maybe for the rest of this decade, bet on a tech-savvy, young, changing India. I think that is going to be really the theme or the most powerful theme which can play out. Of course, as an investor, you need to be focused on individual businesses and look at how the individual businesses are going to shape up. The margin of safety, what's the kind of price you pay for future growth. I mean, those cardinal principles of investing remain. But I think at the surface or the canvas is all about trying to identify businesses which are either adopting technology, implementing technology to grow their businesses in a more efficient manner. We've seen the universe of companies increasing, companies which are totally tech-led. Many of them in the consumer space, many of them in the fintech space, the payment space, the investing space. There's a wide spectrum on which technology is making a difference. There are many businesses which have adopted technology to challenge the status quo. They have disrupted the incumbents to emerge as truly champions of their own space or their own vertical. And I believe that this essentially is going to be the way forward, or an important way forward. It's like Surabhi betting 20 years back on some of the consumer facing businesses. Somebody 20 years back took a call that businesses like Hindustan Unilever, Nestle, Britannia, Dabur, these are the kind of businesses have a strong tailwind because India has a growing population.
The great Indian consumption boom that played out.
So demographics was essentially something which pretty much ruled for the last 10, 20, 30 years. My view is that going forward, it's going to be digitization, which essentially is going to be overpowering. And therefore, as an investor, try and identify and spot businesses.
Okay, Nilesh, so help us do exactly that, right? Because I think that's where the challenge lies. in the last couple of years, we have seen some of these newer companies, they're called new age companies or platform companies or internet companies. Is this the cluster that you're referring to, or is there something else that you're spotting in the market?
No, this itself is a great cluster. To be successful in investing, you don't need too many large number of ideas. You probably just need a few set of ideas where you understand them well, build your conviction and own them for a reasonably long period of time. I think that essentially is very important. These are some of the things which people like us have learned over the years, and I clearly believe that the companies which have IPO'd over the last few years, some of them are into very interesting spaces, the B2C space, the B2B space. Some of them are essentially using technology to deliver solutions to enterprises. Look at the world of payments, look at the world of insurance, look at the world of investing, trading, look at the world of mutual funds where you can buy mutual funds online. There are so many things, and I think it's going to be, it's very varied. It's not just about those 3-4 companies which IPO'd in 21, but it's been a whole stream of companies which have listed themselves over the last 2-3 years, and that's where I believe that there is a phenomenal amount of opportunity there.
Okay, so let me ask you about this, that I think one thing that investors have learned is to ensure that when they're investing into one of these newer stocks, technology stocks, that they should look out for profits. I think that's a lesson that's been very well learned in the market. And to be honest, I mean, a lot of the companies are showing profitability now, either at the EBITDA level, some even at the PAT level. What are the other things that one should keep in mind when they're analyzing these newer business models?
I think the starting point is to really see how big this business can become. And for that, you'll necessarily have to take a long-term view. You can't be looking at, say, this quarter, the next quarter, but potentially over the next 5-10 years, how big this business could grow, which is to look at scale, saying can this business be 5 times, 10 times larger over maybe say a 10-year kind of a time horizon, number one. Number two essentially is the path to profitability if it is not profitable, or even if it is just begun to be profitable, is to see that, okay, when this business is full scale, what's the kind of margins it could have, what's the kind of earnings it could have. And mind you that some of these companies may not have accounting profits, but may still be cash flow positive. And that's because that either they are essentially incurring client acquisition costs or are spending on ESOPs, which is not a cash outflow, though it is an expense. So it's not like that one should ignore ESOPs because that's a cost. But it's not something which may be a permanent cost and may not reflect the future profitability of the business. These could be front-loaded, upfront, one-time kind of costs. So one will have to really kind of decipher all of that, filter all of that and say that, okay, in the next 5-10 years, how big this business could become, what could be its earnings, will it remain cash flow positive business, will it remain capital efficient business, because capital allocation is also as important, and therefore at that point of time what could be the intrinsic worth of this business versus that what's the price you are paying for it today. If one can do this, it's great. If you can't do this, one should not even be there in it. Because it's important that when you invest, you need to understand this business. You shouldn't invest into it just because it's a fad or it's a flavor,
it's a trend.
or those terminologies sound good. You should do it because you need to believe in it, and that belief will come from understanding the business.
No, absolutely, because otherwise you go back to the 2000s and when there was, every other .com was going up, and then more than 80% then went bust as well, and that's not the experience that investors would want to have. Now, I'm not pushing you to name stocks, but just in terms of interesting businesses, could you name companies or interesting businesses where you think that you are seeing some potential? And again, I mean, this is caveat, these are not stock calls at all. These are businesses that Nilesh may be finding interesting as you're doing your own homework.
So I think in some of them we are invested, but in terms of spaces, opportunities, you have fast growing online broking business, okay, which tomorrow will essentially help retail investors to channelize their savings into investments. So which is catalyzing the change in India from a nation of savers to a nation of investors. Okay.
And there's some of these brokers like the angel ones of the world, or the others who may list.
That's right. Some of them are essentially helping the uninsured to buy insurance products.
That's policy bazaar,
So that kind of, some of them are helping individuals to access credit from banks, from NBFCs. Okay, so that I think is important. Some of them are identifying even some very ordinary or very small size tea vendors, for example, and trying to capture their cash flows, because with the online payments with GPays, all these payments happening online, you are able to pretty much track and understand the cash flows, which earlier was not there because payments were being done in cash. How would the tea vendor demonstrate essentially the size of his business or his cash flows? But today he can do that. That helps him to access credit. Businesses like food delivery, online food delivery, quick commerce, these are businesses which I think in the last few quarters, many of these businesses have made very important progress.
Like
in terms
platform fee, I know every time I'm ordering, suddenly my bill breakup says there is that 3 rupee or 4 rupee platform fee, and it's here.
So that's pricing power.
Yeah.
Okay. When we look at a consumer company like say an HUL, where suddenly input prices go up and they hike prices of soaps and shampoos, we don't crib about it. We call it as pricing power. But when it's a platform fee, it gets questioned. But nevertheless, pricing power is getting manifested, and that's the strength of the platform or the strength of the brand, whichever way you call it. If this sustains, you would easily call this a moat. If this sustains, if this pricing power sustains, if you can ward off competition, that's what a moat is all about. So you're beginning to see this in a way getting exhibited. And if this can be sustained, then these will become hugely more valuable businesses.
Sure, got that. So digital is probably, you know, a road to riches, but you need to figure out where the speed bumps are and whether, you know, you're taking the right turns along the way, and whether you're staying the course or not. Got that. So that's Diwali tip number 1 from Nilesh. Now, Neil, over to you. Actually, before I ask you for your wealth advice, technology has been such a huge space for you folks as well, right? I must tell our viewers that PPFAS Mutual Fund was one of the first fund houses that took the call of investing in US technology stocks, the Alphabets and the Microsofts of the world. And I saw the last month's disclosure. I think you still have these holdings in the portfolio, right?
Yes.
So what was the thought process on technology, and you know, where do you stand now?
So when we started investing abroad, we were one of the first one. That's one of the reasons we got into the mutual fund space from the PMS, because that enabled us to invest in foreign stocks. So this was right after a global financial crisis, and 2010-11 we thought that, wow, these stocks looking very attractive, and they were available at almost single PE. And again, we thought that the digital theme or the e-commerce theme is going to play out, and these were the company on the forefront of those things, like the Googles, the Microsoft, the Facebooks, and the Amazon. These are the 4 companies we actually have in the portfolio. And we said that let's buy them when they're cheap. And again, it's been a great ride. The fact that we can't invest today more because the industry has hit the $7 billion limit, so we can't put more money there. But we still have about 18% of the foreign stocks in the portfolio. So today, if you buy a unit of our mutual fund, we still get allocation to foreign stocks. Something's better than nothing. Again, I agree with him that some of these trends are still quite new, and there's a long way to go. So I guess if we had money right now that we could invest, we'd probably be investing in the Googles and Microsoft, because they still are attractively valued.
How interesting. Yeah, I guess a lot of your investors early on, they got a piece of the pie, so to speak, and now we have to wait for the mutual fund overseas investment window to open up for more. But just to go back, and I want to tell our viewers about this as well, and maybe Nilesh, your inputs. Neil, allow me a second to talk about your very illustrious and revered father in the market as well, Mr. Parekh, and that's how the name comes in for a lot of you who are newer to the stock markets. PPFAS, Parekh Financial Advisory Services. That's how the mutual fund house gets its name. I remember I was very lucky and fortunate to have interviewed him way back in the day. I think this must have been 10 years ago. And I remember him talking about the rights and wrongs of investing. He was someone who would always talk about approaching the market the right way, not short term. And he never sort of minced his words on this, right? So what's the ethos that stays with you as well?
So the ethos is that you need to be fundamentally very strong. So there's a saying that tree only grows as tall as how strong its roots are. So our job is to just continue to strengthen the roots, and eventually the tree will grow faster. I mean, it'll grow taller. So we were never, as a organization, because of his teaching, we never focused on the end results or the AUM or any of those things. We're like, let's do the right things for the investors, give them a good experience, and let's not invest just for the sake of investing if it doesn't make sense. Don't take extra risks. So downside protection was a very important thing for the firm.
Nilesh, what do you think?
Well, if there's one word which describes him, and I've been fortunate to know him in many, when I actually started my career, and there's one word which probably best fits him is equanimity, which is to basically keep doing what you do, like what Neil said, you know, just keep doing, ignore the noise around you. You know, I don't think he's somebody who would easily, forget easily, but he would never succumb to fads and what's the flavor of the season. I think for him, investing principles were most important. And honestly, in our younger days, we had a lot more josh in terms of willing to experiment, willing to take risks. But it's only when one interacted with somebody like him, he brought that sense of balance, the sense of equanimity. And it's only something which people like us figured out, you know, over a longer period of time, saying is that this is extremely important. So yeah, I mean, phenomenal. And I use this occasion to have, you know, pay my deep respect and homage to him, and especially for learning a lot from him.
Wonderful, wonderful. So I'm sure he's watching and he's seeing how, you know, crazed today's financial markets are. So Neil, now it's time for you to give us a wealth tip, how to make money in the new Samvat and beyond.
Yeah, so the tip would be the same stuff that you've been hearing before, but it's important to hammer the same principles down, you know. So one is that just like Diwali is, you clean your house in Diwali, it's a good time to clean your portfolio today, you know. Concentrate on asset allocation. If you've gone overboard on one asset, or if you've gone overboard on, say, equities, it's time to probably rebalance that and look at it in a holistic way. So clean up the portfolio. Again, the same things, don't chase returns, the short-term returns. Oh, if something's done well the last 3 months, 6 months, 1 year, it probably will not continue over. So be conscious on the valuation, be conscious on the price you pay for it, you know. So, and don't work on tips, you know, I mean. And thirdly, the investments are supposed to be boring. The minute they turn interesting or exciting, you are not investing, you are gambling. So be careful about that. A little bit of gambling on Diwali is fine, but keep that little money on the side, but your core portfolio has to be invested for the long term.
Very well said. When you said the moment it starts getting interesting, it's gambling, I was thinking of a lot of my friends who would call up saying, hey, have you invested in crypto? There's this exchange. And I would be like, I'm too old-fashioned, old school for this. I don't understand it. I just understand simple mutual funds. So not for me. But speaking of mutual funds, let's talk about current environment. You know, where would you be investing? If you were to pick out, let's say, 1 or 2 interesting fund categories for the coming year, which ones would they be?
Yeah, so I think for wealth creation, I think if you have a minimum 5-year horizon, equities still are a great way to invest. And a fund category I like is a flexi cap category, because the fund manager can move between large, mid, small. You don't have to pick, oh, I'm going to only invest in small cap or mid cap or large cap. A flexi cap gives you the flexibility of the fund manager, the flexibility to invest wherever there is opportunity or wherever there is value. So I would invest for my long-term money in flexibility, but also in the flexi cap fund. But also today, the debt part looks pretty interesting. So during the COVID years, there was TINA, right? There is no other or no alternative other than equities. But today there is an alternative. Debt is pretty attractive. So again, because of the change in tax laws that debt funds had to go through, I think investing in debt through a hybrid fund probably makes sense today, because you get the indexation benefits also.
Now, investing in Indian debt or investing in US debt? These days, I'm seeing mutual fund houses launch funds which are investing in US treasuries, which are now fetching you 5%.
Yeah.
What do you think of that trend?
I think India is good with debt, you know. I think we can stay with debt in India, because if you go abroad, there'll be a lot of other expenses, taxation, which can be a little confusing. So I think for debt, I think we can just stay in India, and again, debt here is giving good 7-8% return. So I think it's not bad here.
Okay, got that. So look at technology, look for interesting companies with promising business models, and keep it simple.
Yes.
Don't get too carried away. I think that's the combined mantra that's coming out of this conversation. Gentlemen, it's been fabulous. I must ask you, you know, it's Diwali. We're at the Diwali weekend now. So, you know, how's the festival for you, Nilesh, personally? What do you usually do? What plans?
So, well, it starts off essentially with a puja, and we have a puja in the office, and then there's some celebration at home, and it's more of socializing, getting together with the family, with friends. that's essentially how the festive period goes.
Wonderful. And what about you, Neil? In town or traveling, or how does it go for you?
So my wife is expecting a second baby, so we're very
Oh,
much in town.
congratulations.
Thank you.
Wonderful.
So it's Lakshmi kind of
Wonderful,
thing
wonderful.
only. So we have an elder daughter, she's 6. My elder daughter, she's 6, and yeah, she'll have Diwali break. So I think I'll have to figure out ways to entertain her if you're not going out of town. So I think it'll be a lot of me hanging out with my child. Again, we do the puja, the office puja, spend time with family. This time it's going to be more home and not go out too much. So yeah, so family time.
Lovely, lovely,
Yeah.
gentlemen. Wish you both a fantastic festive season. May it be filled with health, wealth, and prosperity for you and your families. Thank you so much for making out the time today.
Thank you so
Surabhi.
much, and
Thank
happy Diwali to all.
Thank you. Well, viewers, hope you've enjoyed that conversation. That's it on this week's episode of The Market Cafe. Once again, season's greetings. Have a great festive time. We'll come back and see you again next week.